what a crazy gathering last night. Wow. It's just like couldn't get the girl. I don't know any day trading skills. And I can't apply my day trading skills. I lost $10,000 worth of my dad's money the other day. Like I just can't do anything right, man. I just don't know how to apply my day trading skills or pull girls. Like it's just a problem. Wait, who's that over there?
Yo, Bertolowski.
Oh my gosh, you're the growth investment anabolic steroids guy. Like what's up, dude?
Yeah, man, I heard you complaining over here about not being able to put this girl at the function last night or apply your day trading skills. What's that all about?
Yeah, man. I've learned all of the day trading skills I could possibly need to know, and I just haven't been able to apply them at all. Like I have no clue how to apply them, and I can't even pull girls either. Like I don't know what to do. I have no solution.
Yeah, nah, man, I feel you. But, hear me out. I got this cheeky little fragrance here that you can use to not only apply day trading skills, but also pull that girl that at the function that you missed last night.
All right, bro. Wait. Can I get a whiff of that? Like, can I get a whiff of that? Like, can I get a whiff of that fragrance? Like,
Absolutely. Let's learn how to apply day trading.
so first up, we have different types of trading assets: stocks, foreign exchange, and cryptocurrency. So for stocks, they are able to be bought and sold from the market hours of 9:30 a.m. to 4 p.m. Eastern Standard Time from the days Monday to Friday. And volatility-wise, they are the least volatile, which means that they are the least risky to invest in. However, that means that there is the least room for high profitability.
Our next trading asset is Forex, or foreign exchange. And what you're hoping to do with Forex is you're hoping to profit from the fluctuations in exchange rates between currencies. And I have an example here to explain this a little more in detail. So here we have the euro to US dollar equals 1.1. In this case, the euro is called the base currency, which is the currency that you're actually buying when you would trade this. And the US dollar is called the quote currency. And what you're hoping when you make this trade is that the base currency, or in this case the euro, increases in value relative to the quote currency, which is the US dollar. So if you write out this trade and you wait and you see that the euro to US dollar is 1.5, that means that the euro has increased in value relative to the US dollar because now it costs $1.50 to buy 1 euro. So if you sold here, you make a 40-cent profit. When it comes to market hours, the Forex market is open 24/7 during the week, opening at 5 p.m. Eastern Standard Time on a Sunday and closing at 5 p.m. Eastern Standard Time on a Friday. And when it comes to volatility, the Forex market is more volatile than the stock market, but it's less volatile than the cryptocurrency market.
So finally, we have cryptocurrencies, which are similar to foreign exchange. However, you're not trading international currencies, you're trading digital currencies. And if you're a little bit confused on what that means, we will be doing a series on cryptocurrency later down the line. So if that's on the channel right now, go check that out. If it's not on the channel right now, just hold tight a little bit. And the market hours, it is going to be 24/7, 7 days a week, and that includes holidays. So like if you want to buy cryptocurrency for your child on Christmas, you can do that if you really wanted to. So 24/7, 7 days a week in every country. And volatility is highly volatile, which means that it is also very highly profitable if you do it correctly. So it's very risky, but it also could be very profitable.
So now I'll be talking about how you set your targets or your take profits. And what a target is, it's a price at which you plan to sell to take the profits from a winning trade. And the most basic way to set up a target is to set it at the most recent resistance level. However, similar to stop loss, there's a problem with this. Because when you're trading, you should be trading in an uptrend. And when there's an uptrend, you're expecting that the price actually breaks above the most recent resistance level. So if you set your target at the most recent resistance level, you'd be missing out on the profits that you should be expecting. So one way you can get around this and set a target is by using the risk to reward ratio, in which you first set your stop loss and then you set your target at a multiple larger than the stop loss. So for example, the most common risk to reward ratio is 1 to 2, meaning that your target is 2 times larger than your stop loss. So if you set your stop loss $1 below the price where you bought, you would set your target $2 above. And if you want to be more risky, another common risk to reward ratio is 1 to 3, and if you're more conservative, there's 1 to 1. But you really shouldn't be going any lower than 1 to 1. Also, you can set multiple targets, which kind of gets the best of both worlds from both the basis target and the risk to reward ratio. So how you would do this is you would set one target at the resistance level, and you would set your next target at the 1 to 2 risk to reward ratio, or 1 to 3, or whatever you choose to do. And what this does is If the price does happen to bounce off the resistance level and go down, you would still get some profits from selling at that resistance level. However, if the price continues to go up, you can wait it out and sell at the risk to reward ratio of 1 to 2.
So finally, we have some risk management strategies, and first is backtesting. So once you've come up with a strategy that you think will be successful, you want to go back and look at historical price movements to see if your strategy would have had a high win rate. And you want to do this for as many securities as possible to eliminate any bias that may have occurred in the analysis.
Next, you also want to use trading simulators. And this is especially important for new traders because as a new trader, you're not going to be successful on a live account simply because you have no strategy and you have no experience. So what you want to do is you want to set up an account on a simulator so that you can develop your strategy there and gain more experience and make some trades on there. And once you notice that you've become profitable on that simulator account, then you can consider moving to a live account. Also, if you're a more advanced trader, you can still use trading simulators to do forward performance testing on your strategy, which alongside backtesting can be a really good way to ensure that your strategy is effective in practice.
So next we have analyzing losing trades. So you want to go back and see any losing trades that you've made and figure out what went wrong. So maybe you strayed away from your strategy and bought when you shouldn't have, or you missed an obvious price action that indicated that the price would have gone down and you bought then when you shouldn't have. So basically you just want to go back, learn from your mistakes so that you can learn from them and continue to make wins and profits.
Also, you want to set maximum daily losses and promise to yourself that if you go below that number, you won't continue trading for the day. And the reason for this is that when you lose a lot of money in a trading day, you're going to get emotional and you're going to be angry and you're going to have this intense burning desire to win back your money. So if that happens, you're going to be making losing trades because you're going to be emotional and you're going to stray away from your strategy and lose more money than you already did in that day.
And finally, you don't want to force trades in a bad market day. And a lot of the times, even if a stock is in the red, you can use shorting to make short-term profits. However, most of the time, you're going to be wanting to do long trading as a beginner. And bad market days are just not good for investing in general. So if you just don't see any price movements going up or down, it's just kind of staying in the red, you most likely just don't want to go in, as it'll most likely just end in a loss.
In this video, we went over a bunch of different things regarding how to apply day trading. First thing we went over was the different assets that you can trade as a day trader, which includes stocks, forex, and cryptocurrencies, and the benefits and the cons of each of those.
We then went over time frames, which consist of 1 to 15 minutes, even to 1 day to 1 week, and how you can implement all of those into your trading.
Next, we went over how to develop an optimal strategy to ensure consistency through your trades and avoid allowing emotion to influence your decisions.
We then went over how to set targets and stop losses so that you can minimize your losses and maximize your wins.
Lastly, we went over a bunch of risk management strategies that you can use to minimize your losses with this notoriously risky investment strategy.